and welcome to NDTV Profit. We're currently in the midst of a storm for the IT sector, some would say, but for good reason. This sector has been the sunrise sector for over 2 decades. Today, we are in conversation with the big boys, the CEO of LTI Mindtree, talking to us about the road ahead for the company, for the industry, and what lies ahead. Well, we have with us none other than Debashis Chatterjee, more fondly known as DC. Thank you very much, DC, for joining us today on the show. DC, we are currently in the midst of a rather tough period for the IT sector. For good reason, this was called the sunrise sector for over 2 decades. It's the only sector that's done positive returns, even in terms of equity markets, for the last decade or so. But times are changing, situations very different on ground, challenges persist, and it doesn't seem like we're bottoming out just yet. In the case of LTI Mindtree, there are different moving parts, right? You've had a significant merger which made the headlines, now finally behind you, if I may say. What, according to you, were the highlights and what were the risks, the challenges when you're going out with those objectives of merging the two entities? Do you think you've navigated that and it's only forward-looking now?
So first of all, Samina, thank you for having me on your show. If you look at the unique proposition about these two companies coming together, I don't think there are too many situations where two companies of equal size, almost equal size, came together. And if you look at the integration that we did for erstwhile LTI and erstwhile Mindtree as LTI Mindtree, I think it was done in a record time of 6 to 7 months. Of course, there were challenges. The very fact that two companies of equal size, there are a lot of advantages, but there are a lot of challenges. You need to ensure that culturally these two companies integrate well. I was very keen to drive the culture track myself and driving right from the top. But overall, I would say the integration has gone extremely well. The clients, the partners, the employees at large, everybody is very excited about the merger because it offers a lot of opportunities. If you look at the number of clients we have as a merged entity, we have 700 plus clients.
Yes.
The unique thing about the merger is that only around a handful of 10 clients 12, who are common customers. So which means that we have a huge cross-selling and upselling opportunities into the remaining clientele that we have. So overall, the merger is behind us, the integration is behind us, and we are all excited to see the opportunity that presents in the medium to long term.
Yeah. And DC, I'm going to take a cue from that because when you did the merger, you talked about exactly this. The primary objective was revenue growth, cross-selling, upselling, and the fact that there was such little overlap, the opportunities were so much more. Now, a few months out after the complete closure in that sense of the deal, deals are still not flowing through the way I guess you'd like. Do you think this is an industry phenomena because the timing of it may not be ideal, or do you think more work needs to be done as a merged entity to go out and acquire those big deals?
So let me address that in two ways. First of all, since you mentioned timing, I must also call out that when it was decided to bring these two entities together, the only consideration was that we will bring these two companies together when both the companies are doing well in their own rights and both performing very well. So when we brought erstwhile LTI and erstwhile Mindtree together, both the companies were doing extremely well from a profitable growth perspective. So we never tried to do time the market, let's put it that way.
And nobody saw this coming.
Nobody saw this coming. So we were very happy to do the merger, get the integration out of the way and think of what we need to do. Now, the second thing which I want to highlight is you look at the kind of work that both the companies were doing through the pandemic. What pandemic did, it was a lot of discretionary spend that came on the table and all the IT companies latched onto it, that including LTI Mindtree. And post the pandemic, when there was a bit of a slowdown, cautiousness in the marketplace, bulk of the work which was transformation kind of work, which is discretionary spend, that started slowing down. And instead of that, most of the work that we are talking about are cost takeout and efficiency. Now, this is a thing which we need to appreciate because, both the companies where, LTI Mindtree per se is now changing from a stage of transformation to the cost takeout.
Efficiency.
Now, what happens with the cost efficiency deals? First of all, these are longer tenure deals, which means if you talk about efficiency, it has to be done over a period of 4 to 5 years. You cannot do it in 1 year. And when you invest in these kind of deals, it involves rebadging, it involves some transition. So the first year is always going to be challenging in terms of the revenues kicking in the way you want. But over a period of time, they kick in. So when you talk about the deals that we have signed in the last, say, 12 months, 9 out of 10 deals are all on the cost takeout. So which means that once these deals start ramping up in the way we want, it will definitely, it's more forward looking in terms of the revenues as well as the margin. But having said that, where is the challenge? The challenge is, in the macro, we never expected that the decision making will be so slow. When clients have taken a decision to award a project to us, when we start ramping up, the ramping up is also slow. So some of these factors are not helping anybody in terms of ramping up the deals the way we wanted.
And this is not company specific. It is an industry-wide phenomena.
Well, I can definitely tell you that we are getting, we had our share of situations where the delayed decision making has impacted our growth. And yes, you can say that I'm sure others are also facing the same situation. But profile of revenues or profile of deals that we have, since they are mostly cost takeout now, shifting from a transformation play to a cost takeout play, we are going through that transition.
So, and help me understand this, right? In a more sort of ballpark, if I may, you've got operational efficiency, which is cost efficiency, and you've got transformational. Your strength as a company sits with transformational deals, right? And you said the chunk of the deals coming in are more cost efficient. What happens going ahead? Do you think transformation would come back and pick up? Because I'm assuming these are far more profitable in nature. If they are they more profitable?
Well, I think both are profitable.
So you're okay doing both in terms of profitability?
You have to do both. You can't do one. And again, I will just give you an anecdote. If you look at what happened in 2008 during the subprime, after 2008 financial crisis, nobody was talking about discretionary spend. But if you look at 2009, 2010, there were quite a few large deals which were announced, which are all cost takeout. Look at what happened in the pandemic. During the pandemic, nobody talked about cost.
No, it went back.
Everybody was talking about discretionary spend, migrating to the cloud, so on and so forth. So there are phases where people are more focused on discretionary spend, transformation. There are phases when people are focused on cost takeout. But there was an interesting phase after the pandemic, when things started slowing down. We had customers who were actually talking about, can you do both? Can you do cost takeout, take the dollars out, which will help in terms of funding the in-flight transformation, because they started the transformation.
So if you're saving money, you reinvest it back into the business.
So there was a phase like that. So we were also benefited by that phase.
But and that's a sweet phase for a company like yourself.
But now it's again tilted back towards cost takeout. I'm sure transformation will come back at some point of time. But to the larger point that I wanted to make is, as a company, as an organization, your strength should be such, your capability should be such that you can do both.
So you've got to be a little nimble as well in that sense.
You have to be absolutely nimble, and if you cannot do both, you cannot survive.
You set out with fairly ambitious revenue targets as well. Just before the merger, you were at what, $4 billion? I did read somewhere where you said you'd like to hit $5 billion by the end of FY25. Of course, we didn't anticipate the slowdown taking so much longer. You think you're getting close to that number? Because as it stands, it looks like it still could be a few quarters out.
No, I think we have already, in the last quarterly results, we have indicated that, our overall game plan that we have in terms of the long-term vision of the company, that is intact.
Okay, great.
For example, we are, as a company, the vision that has been laid out by my bosses, Mr. Nayak and Mr. Subramaniam, it's very clear that we want to become a $10 billion enterprise at some point of time. That doesn't change. Now, $10 billion will not happen through only organic. There will be some inorganic as well, acquisitions as well. But it's a long-run plan. But if you lay down a plan, then you need to move towards that plan. What we called out in the last quarter is that we had some margin goals, etc. But we said we are going to pause it for some time, because it is not possible, the current scenario, pursue that. It will be delayed by a few quarters. That we called out.
And I mean, your returns or your profitability is a function of the industry. So the industry is not growing. There's no way you're going to beat that by a margin, right?
Profitability is also a function of the top line that comes in. So if the top line is not coming the way we anticipate, then obviously we cannot push the profitability levers so much so that it impacts the growth.
Compromises on costs.
So we don't want to we want to have both. So for the time being, we can probably pause in terms of maintaining the profitability where we are. We can continue to get the growth back, and profitability will come back. But at an overall level, since you talked about a specific number, at an overall level, we still have an aspiration. We have not given a timeline, but we are putting all the engines and all the machinery in place to ensure that we can go to a $10 billion over a period of time. And the journey that we want to embark on, it should be a profitable growth journey.
I'll talk to you about the glide path to the 10 billion in a minute, but now you're part of the big boys club, right? I mean, you're the big guys in the IT pack. And I'm sure you're getting a sense of what's happening on a political front. The US is going into elections. Times like these, spending, decision making is usually delayed. What are client conversations looking like right now? Are they committal? Are they avoiding conversations? Is it all still very... Because we hear some people say there are green shoots, but the reality is that's not reflecting in actual deal conversions.
Well, I would say that the client conversations are still going on the way they normally go on.
Yeah.
We are working on deals, especially cost takeout opportunities. They're going on. There are a couple of situations where it's a combination of cost takeout as well as transformation, as I said. But what we are witnessing in the market right now is definitely there is a decision making which is slowed. It is a slowdown in terms of decision making. Customers are very cautious. I mean, I'll give you an example. If you look at the financial services industry,
Yes.
it's an industry which depends on a lot of regulations.
Right.
Now, some of the regulations means that you have to do a lot of discretionary spend to make sure you're compliant with respect to. Now, if you are talking about a scenario which is uncertain, where you're waiting for the next the election results
You're not
to be
going to make any of
announced,
those commitments.
you probably will anticipate some regulatory changes in
Yes.
some areas. So in that situation, why would a client try to spend a lot of money in discretionary at this point of time? They will rather hold back and wait.
Yeah.
So those are the kind of scenarios which we are witnessing. But when it comes to cost takeout, I mean, many clients have grown their business through a lot of M&A. I mean, there's a great opportunity of taking some cost out of the system. They're focusing on that. So clients also decide what to focus on at what point of time. When their businesses are growing, they may not be focusing too much on cost takeout. But right now,
so it's
a great
consolidate, bring the house together,
bring
and
the
move
house
back
clean,
up.
which will help them simplify the structure, make the whole estate very simple. There's a lot of technical debt in all those estates. Why don't you take the technical debt out? So those are the kind of things where clients are interested
So, you
in
know,
right
when you
now.
have these conversations, DC, while we're all waiting for the outcome of the US election, would it be a fair assumption to make that it's only a matter of time that these conversations actually, convert into real commitments, putting pen to paper?
Absolutely. I think it's just a matter of time.
So maybe 2 to 3 quarters out, I think that's a realistic
I think that's
expectation.
that could be potentially the way to look at.
That's a best case scenario, you think?
I don't think we can say that because
Just
we still
yet.
have to
Yeah,
wait.
yeah.
But bottom line is that even if we are talking about some of the macro in the US, whether it's the interest rate or the elections, etc., but there are clients who are still working on GenAI, for example. They are doing a lot of pilots with us. A lot of use cases are being built around GenAI, and which we know that if they work out well, then the clients would like to take
You
them
want
to
to
production.
simplify that for our viewers who don't really get terms and
Well, I
understand
think
the industry. It's always
first
good.
of all, AI was always there.
Yeah.
Data was always there. The first thing that I will simplify is that when you talk about GenAI, don't ignore the data piece. Data plays a very critical role in the. Now, when you talk about GenAI, I will simplify it in this way. There are 3 broad areas where we have seen the application of GenAI. The one of the area is that when clients are leveraging GenAI, build some use cases which will help in terms of growing their revenues.
Correct.
So that's a revenue play.
Contribution.
Then you have use cases in terms of GenAI, whether you're marketing ops, campaign management, or which are doing automated testing or bringing some efficiency. Customer service where you can automate a lot of things. So these are all efficiency play, where by leveraging GenAI you can get the job done much more efficiently. You don't need so many people.
So it's top line or bottom line?
It's a top line or bottom line. There is a third play in GenAI which we feel is, because we are as a company doing a lot of code development.
Right.
So can you do all those things much faster?
In a more efficient manner.
Can you do code generation leveraging GenAI, for example? So these are the 3 buckets that we look at. The first one is revenue, the second one is efficiency, and the third one is engineering transformation or engineering productivity. I would say the first bucket is still something that we are working on, but it will take some time. It's early days, but the potential is huge because you can probably disrupt the business models, existing models, by leveraging GenAI. The first one, which is the revenue side. Most of the work that we are doing, in fact, some of the work that we are doing for our clients have taken it to production as well, is on the second and the third one. Like where you are doing a large legacy transformation and you have to do a lot of code conversion and code modernization, we can leverage GenAI in those scenarios. So the second and the third are something that we are seeing. It's happening right now. There are a few use cases where we are working with clients which have gone into production, but there are a lot of other use cases that we are developing on our platform. We have a canvas.ai platform where we can help our clients to develop those use cases and test them out. So that's kind of, that is in the works. And the other thing which we have also done, just for you to understand, we always keep talking about industry verticals and
Yes.
horizontal
Yeah.
capabilities or service lines. GenAI actually fits into everything.
Okay.
So we have created an enterprise AI team, which actually cuts across all the industries as well as all the service lines. And the job of the team also is to ensure that through the organization, we propagate the learning around GenAI. So out of the 82,000 employees that we have, almost 10,000 plus employees have already gone through the GenAI orientation, and
Training.
it's continuous process which is going on.
I'm so glad you bring this up because that's what I want to talk to you about. AI, we now hear it ever so often, right? I think that's the only conversation that happens in schools when children are learning robotics, or think older people are trying to just figure out what this really means. What does AI mean for LTI Mindtree? What is the sort of commitment, contribution you're making to this? And what will this mean for shareholders? So while it may improve, will it improve numbers? Will it help you bag bigger orders? Couple of years out, tell me, from a shareholder of LTI Mindtree, why is this important for me?
So as I said, these are the early days, but huge potential. And I always believe that if you're talking about a new thing, new area like a GenAI, you need to become the customer zero for GenAI within your organization as well. So which means that within LTI Mindtree and the larger L&T, can I develop certain use cases which I can use for my own
improving
betterment,
my own company.
Like for example, we are doing a lot of application of. We have already implemented GenAI in terms of policy administration, which means that if you have HR policies across multiple geographies, earlier you will be kind of doing a lot of searches, a lot of comparisons and all these things. But if you can develop the LLMs in the right way, large language models in the right way, you can actually do that much faster.
And if this works for you as a client, then this is exactly what you go out and sell to other people.
So essentially right now, if a client comes to my organization for a GenAI demo, I actually give a demo of what we have done within the organization. Take a slightly larger picture. Look at L&T as a engineering and construction conglomerate. There is so much of knowledge sitting over there. Why can't you create a LLM around engineering by leveraging the knowledge that sits in L&T? And why can't we build that and take it to the external clients around the world? So those are also some of the things that we are trying to do.
And this is again sector agnostic, like we said, right? Or vertical agnostic.
It will be, there will be a generic part which is sector agnostic, but there will be also specific sector-wise LLMs that we'll be building as we go along.
And how should I say this, right? So while this will improve the company as a whole, because of course you are a case study and a client to LTI Mindtree yourself, but when you go out and sell this in terms of objectives or in terms of numbers that you're putting out for yourself and your team, what contribution of AI-led business would you expect your top line to come from? And I'm not asking you 1 quarter or 2 quarters. Let's talk 5 years.
Yeah. So I will tell you, I have a slightly different way of looking at this problem. What we have to understand is that when you create a solution for a client, or try to solve a problem for a client, it's an end-to-end solution. It has got multiple building blocks, and you have to touch all the building blocks to solve the problem. GenAI will be sitting in 1 or 2 of those building blocks. But GenAI is not going to be the
only building block.
It cannot be just entirely through GenAI. So essentially, when you talk about what will be the revenues coming from GenAI, it's very difficult to call it out.
Would you say contract value would improve?
Well,
because you're adding that service?
Well, I think it depends on the specific situation. All that the contract value, it may come down also.
Because there's lesser
you may have to cannibalize your own revenues to kind of give the benefit back to the client. But if you are able to do that and client sees value, maybe more work will come your way.
It's a tightrope to walk, DC.
It's a tightrope to walk, and it's the same thing that happened when cloud came into play. When cloud came into play, a lot of people were concerned about what happens to the on-prem. And all the on-prem was moving to the cloud. So we had the same concern over there. I don't think the business has gone down. More cloud adoptions happened and the companies are thriving. So my view is that, there will be always a change. A change is always change is the only constant. It's refreshing. But every organization will be required to develop different kind of skills and capabilities to tide over this. Because you need to train your people on various new skills. Prompt engineering. We did not know about what is prompt engineering, because if you are talking about leveraging GenAI, you need to use the right prompts to get the right results. So you have to have prompt engineers. Then you are talking about Copilot as a model, and you have the co-pilot. And why are we calling it co-pilot? Because co-pilot is assisting me to take some decisions, and I have to also
It's
train
not
that.
the pilot, yeah.
I am trying to train that model. So there will be model trainers as
Are
another
you
role.
making significant investments in Gen AI?
We are making significant investment. We have already made a lot of investments in a
Can you
platform.
quantify that for me? Give me a sense.
I don't think I can quantify that, but I can tell you that at this point of time, the best investment that we have done is a Canvas.ai platform that we have built. And what it means is that we have got this platform where I can encourage my clients to work with me in terms of creating a specific use case, which could be on the revenue side or the efficiency side or the engineering side, any of these areas. And if I can do that, because clients will not have access to all the LLMs that's available, but I have this platform where I've
So
made
it's a little bit
everything
like a
available.
buffet, right? And
It's
then you
buffet,
offer
and I
what you
have all
want.
the options available, so I can work with the clients and we can see what works and what
And
does not
that's
work.
happening? Are you seeing that convert into revenues and deals?
That's happening. And that's what I meant to say, that some of the use cases have gone into production as well. But it's slow. I mean, on the
So they turn revenue creative maybe a couple of months down the line, maybe a year down the line.
Yeah, because they're all waiting for the use case to mature. Because see, I think it's you have to also understand there's a lot of data play over here. So when you talk about Gen AI, you have to also build the right LLMs for the clients, which takes time. But once you are convinced that it will work, it will also, the customers' business models will fundamentally change. The way they used to run their business model, they have to reimagine their business models. So it will be
That
fairly
requires
disruptive.
bravery as well.
Exactly.
It's a
So
big
essentially,
jump.
clients also will not do that
There's
unless they're
resistance.
absolutely sure.
Yeah.
But where we can help the clients is let them come on our platform, look at the options available, and then let them choose in terms of what could be ideal for them.
And talking about clients and talking about all this amazing work that you're doing with AI, which geographies are you focusing on? I mean, I know chunk of the balance sheet, chunk of the top line comes in from the US, and you cannot ignore that part of the market. Do you feel like with this new age technology, with AI, with other countries now turning significant? You had a JV with Aramco, and I'll talk about that in a minute.
Yeah.
But do you feel like you're deleveraging your US book?
Well, I won't use the word deleverage, because US is very important for us,
And it continues
it will
to be.
continue to be very strategic for us. But we are always looking at other opportunities of growth as well. And today, when we are talking about all the use cases that I'm talking about, Gen AI, bulk of them are still with clients in the
still
US.
in the US.
And they are all excited about the potential
What
of
about
Gen AI.
countries in Southeast Asia, Middle East, India? I mean, we are significant now in
It's
the world
happening.
map.
It's happening in pockets even in Europe and Asia as well. But since you mentioned about Saudi, that is one of our strategy where we thought that we have to think of something outside US as
And
well.
you did win a big deal over there in 2021, right? Going all the way back.
We have some work
Exactly.
going on with some banks in Saudi, but I think this is very strategic for us, because this is like aligned to the Saudi Vision 2030. They have a huge plan of digitalization across the country, and within KSA we are now building out through this Aramco JV, AI, data, digital services, cloud JV, where we can support the other government initiatives and some of the other fast moving like energy and utility and financial services. All these things can be done through the JV.
And this is largely Saudi.
This is largely Saudi.
Not the whole MENA region.
No, this is largely Saudi.
Right.
To start with, largely Saudi.
Yeah. But again, I'm assuming the plan would be to sort of spread your wings
absolutely.
as
But
you go along.
there is so much of work in Saudi itself.
Which is
we
great.
would
It
like
keeps
to
you
stay
busy.
focused. And this is also kind of a diversification
Any deals
strategy.
have come through on the joint venture?
No, the joint venture is still getting formalized. It should get formalized, and once it gets formalized,
And what is the timeline in terms of formalizing?
it should be another 2 quarters at the most. It can happen before that.
And so conversations will only start post the GV's form.
Conversations have started, but the thing is, in terms of once we formalize and once we have the teams and everything in place, because Saudi is also a little different, because there's a lot of localization as well. So we are also aligned to we are also aligning to the localization or Saudiization as we call it. So there's a lot of work going on in the background, but the results will probably come in next 2 quarters
out. Yeah. And if I had to ask you, I'm not going to say 2 quarters out, but maybe 2 years out, what sort of revenue contribution do you expect from the MENA region? And I'm not saying Saudi, because we're looking at it a little more long-term in nature.
Well, I think it's fair to say that my US revenues right now stand at 72%.
Yeah.
If that can go down to 70% or a little lower, I'll be happy. And where will it come from? It will come from all these other initiatives that you're talking about. In fact, we have been going very aggressive in Europe as well. So we have always been talking about how do you bring the US revenue percentage down and to grow the other regions. But we don't want to degrow. The US is very, very strategic for
So
us.
you want to stay at where you are with the US and just grow the other businesses.
I will grow US, I will grow the other businesses faster. Let's put it
Of
that
course,
way.
there's a base effect,
Yeah.
right? It's so much easier to grow
Yeah.
MENA
Yeah.
than to grow the US. We talked about acquisition, and you said to get to that $10 billion, you can do this on your own, but it'd be just easier and quicker if
Yeah.
it's acquisitions. Where are these companies you're looking at? You've just had one of the two stalwarts merging. Where, how, timelines?
Yeah. So if you look at acquisitions, first and foremost, I'm not going to do an acquisition
For the sake of
just
it.
for the sake of
Yeah.
scale. I will do an acquisition which will be helpful for me to grow my business faster. I'll give you a specific example. If you look at the announcement that we have made in the recent past, we have been focusing a lot in terms of platform operations, which is like, a lot of platforms that we manage for our clients, can we not also provide the operations? We build the platforms, but why don't we do the operations
back end
also?
as well. Okay.
Yeah, the back end as well, the BPO kind of.
Yeah.
So if you can do that, then why not also look at an inorganic, which will help
So
us
you
to
pick
get a
up a
head start.
BPO and you bring the platform, and then
Right.
that
So
works
essentially,
together.
those are the kind of things we'll look at. Even if we look at some of the practices that we have, industries like healthcare and life sciences, these are significantly smaller compared to some of the other industries that we have. So if there's an opportunity over there in terms of an acquisition, I will always look at that.
And these would be small ticket acquisitions,
this could
right?
be either
You
tuck-in.
can't expect an LTI Mindtree kind of acquisition on the cards.
The point is, depends on the scenario, depends on the situation. But at this point of time,
But when you're sitting with your board, DC, are those conversations happening right now?
Absolutely. In fact, there is a team which
constantly
continuously scouting for opportunities. But as I said, I'm not going to jump into an opportunity unless I see value from a long-term perspective. I'm not going to do an acquisition if it is just for scale. It has to be the sweet spot where it's a white space we are trying to, as I give you examples, that wherever I think my overall strategic growth is going to come from, if I can complement that with an acquisition, I'll definitely do that.
Right. Also, I want to talk about, I think through this interview as well, reiterated multiple times how being profitable is so important to you and to the company. And as you look at growing other businesses, I know there was an initial setback in the last couple of quarters where your margins dipped, but this was on expected lines post the merger. There's still some, and you may not want to talk about numbers because I know earnings are around the corner, but 17 to 18% is what you've maintained is comfortable for you. Do you feel like with other geographies, other verticals going to start contributing a little more significantly in the next few years, those margins could see an upside risk, and then maybe we're looking at 18-20%. Is that the bracket you'd like to be at, or it's being unrealistic?
No, I think at this point of time, let's assume that our overall goal is to at least get to the 17 to 18%. We wanted to get there earlier, but as I said, we kind of paused that and we said the revenues are not coming in line to what we expected. So let's not try to push that lever very aggressively. But I can tell you that the margin is not something that can happen just
overnight.
in one quarter overnight.
Margin and it's not just one deal, right? That might take up the base.
Margin is an execution discipline. So margin has to be, it is something which has to be the DNA of the company. Profitable growth is not something if I want, it can happen.
But you were at that pre-merger. You were at 17% pre-merger.
Right, which means that both the companies know how to do it. Both the companies know how to do it. It's just about doing it
together.
It's exactly. It's like doing it together. But also, when I explain the deal profiles, if you are doing a lot of discretionary spend and transformation, then the margin is healthy. But if you're doing
operational and cost
efficiency, typically what happens is for the first 1 year, there'll be a little bit of margin dilutive. And if all your deals are going to be mostly
in that phase,
then obviously there will be a little bit of challenge with respect to margin. But the good news is that I have a very disciplined execution team which is executing on the margin all the time. So which means that the organization DNA is aligned to the profitable growth story. So it is not that I say profitable growth, but the entire organization believes in profitable growth, and we can make it happen.
And when you say returning back to 17%, do you think that's possible in the near term?
Well, not in the near term, because I'm looking at medium to long term, but it is definitely something which we'll achieve over a period of time.
And you'd be happy sustaining at those levels?
I mean, if there will be also some synergies which will come, which we had called out as a result of the, integration. Because like we are consolidating some real estate and all these things, so those benefits also will start.
So non-core actually.
Non-core, that will also come back.
And when do you anticipate?
We always said that from a synergy.
How much of non-core assets are you sitting on?
No, actually, rather than that, let me tell you what we called out. We have called out around 150 to 200 basis points we should get a benefit, but it will be more back-ended. So if I look at the overall journey over the next 4-5 years, it will be more back-ended. because our synergy that we wanted to create was more on the revenue side. I think the focus that we had was the revenue synergy should be front-ended, the margin synergies from the acquisition should be back-ended. That's the way we can plan it out. That might get a little delayed, but overall, right now, the go-to-market strategy, the kind of capabilities, solutions that we are absolutely ready. We are just waiting for the so-called downturn to kind of
Come
ease
to an
off a
end.
little,
Yeah.
and then we can again go back.
And you think it's a fair assumption that in the next few quarters the downturn should ease because it's so many mixed signals. I mean, of course, a part of me can't understand why we are still hoping for a Fed rate cut if the economy is doing well, but that's for Jerome Powell to decide on.
Yeah. So I always feel that there is always a macro, but more important than macro is the kind of clients I have. So I am continuously talking to
And
our
there's been no
clients.
client losses as such, right? So
No, I think
retention is not an issue at
no,
all.
not at all, not at all. In fact, I don't think clients have ever. I mean, we are not talking about
And are
cancellations over here.
old deals getting renegotiated at better pricing?
Well, that will also happen, but that will also ensure
But not
that
happening right now.
it is happening.
Oh, it is
I mean,
happening.
there are renewals which are going on. So essentially, our portfolio, whenever there is a deal renewal going on, there's always an efficiency play in that. But we also try to see whether we can extend and expand on that in terms of getting the size of the deal
So
larger.
increase wallet share.
Increase wallet share. So essentially, that's exactly what we have been talking
Yeah.
about. Our entire philosophy of the merger is, which we have not been able to do, but we are very confident doing in the medium to long term, is we have
And
about
why do you
700.
think you've not? So again, very quick one there. Not being able to do that is a function of the industry,
No, not being able to do is more in terms of
or is it internal
clients.
resistance maybe,
The
or clients resisting?
Clients are also resisting the change right now, because if you even if you have a
Any
good
change is tough,
proposition,
yeah.
if you have a good proposition to the client that you can consolidate and I can do things better, but I think they are also, they
a
would
matter of
like, there's
time.
an incumbency factor which they don't want to change at this point of time. In fact, there are a lot of consolidation deals
Because even
happening.
change cost, it does cost
costs.
time, money, effort for a
Transition
client.
and all
Yeah.
those things. So, but at the same time, there are quite a few consolidation deals we are working on, and we have come out with on the right side of those deals as
So
well.
you're feeling good about this merger. You feel like the setbacks are behind you.
Oh, that's the merger. There is no question about the merger. And as I said,
and you're feeling good about the industry as well. It's only a matter of time.
I think it's a matter of time. I mean, if I look at the last 30, 35 years I've been there in the industry, I've gone through a lot of downturns. It is just that we have not seen a pause like this for
So
quite
this
some
is the
time.
toughest time as an IT honko that you faced in your career?
I think there were tougher times.
Oh, so you've had more sleepless nights.
I mean, as I said, 2008 financial services.
Oh, yeah, subprime
I was
crisis,
running banking and financial services practice for another organization.
But now you're
I
CEO.
don't think I have seen that kind of time, and
Oh.
even pandemic for that matter. I mean, if
It
you look
worked
at
out eventually.
Pandemic when it happened, the Mindtree's at that time it was Mindtree.
Yes.
And I had 17% of my revenues coming from travel and hospitality, which overnight
Hit.
disappeared.
Yeah.
So you come across this tough time. But what is surprising over here is that I have not seen this kind of a caution for such a long time. And I am hoping that this is not going to last for too long. And again, there are, when you talk about the macro, you can talk about elections, and there are so many countries going for elections. It's
Why
just
is
not
this
the
only
US.
a US function of the US? Yeah.
So it's like really, I mean, then you see the geopolitical. You just add it. Just
you
adds
look
up.
at crude. You look at, but everything
So
has a mind
essentially,
of its own.
there is a lot of caution in the marketplace among the clients. There is a delay in decision making.
And
that is
that's
for
been
sure.
happening for the last few months, right?
I would say it's
Or
happening
last
the
year,
last
actually.
1 year. Last
Yeah.
1 year, we have been thinking that the decision making will be faster. See, that's why the deal conversation are not stopping. We are still having conversations on deals. There are still consolidations.
And
Clients
a
are
lot of
planning.
these conversations that are coming in are still inbound in nature, or are you aggressively reaching out and
Well, it's inbound to some extent because we have got a
Which
seat
is
on the
good, which
table
is a
now.
good thing
Because
now,
being
right?
a $4 billion company,
Yeah, you're
clients cannot
serious,
ignore
yeah.
me. But at the same time, many of the conversations are also proactive because we feel that we can provide better value through the cross-sell and the upsell with our existing clientele, which
Yeah.
is a quite huge number.
Right. Also, just one last thing to wrap this conversation up for your shareholders, your retail shareholders, of course, not the very big significant ones. 2 to 3 years out, what is it one thing that you want to tell us that we should be watching out for, and why LTI Mindtree is a force to reckon with at this stage?
Well, I think the one of the most satisfying aspect of my journey in the last 4.5 years has been the phase where I could do consistent profitable growth.
Yeah.
And I would like to get back to that phase. And it may take a little time, but I'm sure we can do that. And that's the best thing that I can offer to
Any shareholder.
any shareholder.
Thank you very much, DC, for joining us today and talking to all our viewers and your shareholders, stakeholders about what's in store for LTI Mindtree. Thank you.
Thank you so much. Thank you for having me here.
Thank you.